Looking ahead to the trading week beginning January 15th, keep in mind that Monday is Martin Luther King Day and U.S. markets will be closed. The first thing we're going to look at is the stock recovery that we saw in the S&P and the NASDAQ last week, but we didn't see in the Dow and the Russell. So which index, or I should say pairs of index, will dominate? Will it be the downward pressure that we're seeing on the Dow and the Russell, or the upward pressure on the S&P and the NASDAQ? That will be something to keep a close eye on, especially since when you look at yields last week, we lost 23 basis points of yield in the 2-year note. We lost 17 in the 5-year, 9 in the 10-year. 10-year ended up around 396 on their yield, and the 30-year lost 2. But that 2 cents inversion, negative 21. So keep an eye on that inversion. That's one of the lowest levels we've seen in quite some time. We're also going to be looking at rate cut expectations, which after last week, markets are back to pricing in 7 rate cuts, 25 basis points at each meeting starting March 20th. That is a big number of rate cuts. Now, maybe the Fed delays a couple of those cuts and then goes 50, but to have all those rate cuts in somewhere around 350 basis points, that's a pretty big move, and that likely means the economy is weakening, so we want to keep an eye on what the expectations the market is placing on those rate cuts. Also, it's time again, another debt ceiling deadline. The partial government shutdown deadline is now January 19th at midnight. So the Senate is preparing to vote on a stopgap funding measure Tuesday, January 16th, after they get back from the Martin Luther King holiday. We'll see what the House does with that. So keep an eye on debt ceiling headlines. Haven't been affecting the market as much lately, but it's still something to watch. Now, earnings go into high gear next week with 44 companies reporting that have market caps over $1 billion, including more big banks like Morgan Stanley and Goldman Sachs, financial firms like Charles Schwab and Interactive Brokers, and regional banks like PNC, U.S. Bancorp, Truist Financial, Fifth Third, Northern Trust, Region Bank, and KeyCorp, and also some economically important firms like Schlumberger, who's an energy equipment provider, and J.B. Hunt Trucking. Those are important as well. In terms of data, you have to go all the way to Monday. We get German full-year GDP for 2023 and Japanese PPI. Tuesday, German and EU ZEW economic sentiment, UK employment data, Canadian inflation data, and Chinese GDP. Wednesday, UK and EU inflation data, as well as US retail sales, industrial production, and the housing price index. Thursday, U.S. housing starts, jobless claims on the Philly Fed, and Japanese inflation. And then Friday, U.S. Michigan sentiment preliminary for the month of January.